Hello everyone, welcome back to my channel. Welcome back to another weekly analysis. Hope you guys had a great weekend, and let's see how we can make the most money this coming week and try to understand my trade plan, my logic and my levels to execute positional trades at this moment. So let's begin with US futures. As we had discussed in the last video, if you could refer to that, this is a very nice pattern. It looks bullish in the long term because now a lot of people, they name patterns as such like descending triangles, ascending triangles and all of that. What you got to understand here is the support remains the same, right? In US futures, the 32,500 to 32,600 zones, this is the support. This is not changing at all, but the resistance is going on changing, right? So eventually with this support being tested and seeing such a strong bullish candle jumping back above the 200 DMA, a highly likely possibility is that we are going to break this channel eventually and see a strong bullish rally in global markets, which will also reflect on our charts. And it looks like that. It looks factored in. We are almost heading to all-time highs in Nifty. So US futures, I am bullish until you see a closing below 32,500 on a daily in US futures. Until then, the trend is midterm, long-term bullish. Intraday, you could see some shorting here and there, but the trend all in all is bullish right now until you see a closing below 32,500. When you look at dollar, we had discussed the last time that it's approaching a very strong resistance, and Dow was approaching a very strong support. So to have an idea, to picture how the next week might look, to analyze the market accordingly, that is what a trader's responsibility and job is. So considering the fact we are approaching a very strong resistance from where the markets fall in 3-4% every time, right? So from a zone like this, the most likely favorable trade would be shorting the markets around these 104.5 levels. And considering there are 5-6 candles, green candles back to back, there has to be some sort of retracement at least to retest the 200 DMA. So in that brief time that the dollar is correcting a bit, we might see our all-time highs being taken out or probably even a closing above them. So let's see. This is what dollar looks like. It's at a very strong resistance. Now the only next dollar long opportunities will be above 104.7, 104.8 levels, but then that will be a big breakout, right? Then that breakout could take us all the way to 106, 107 levels. So keep an eye on dollar. If you see any kind of retracement or resistance over here, that's good. That's going to be bullish for our markets. Now coming to Nifty. Now since it's the beginning of the week, let's begin with a weekly analysis. Let's start with a weekly time frame. So basically on a weekly time frame, this is a very strong bullish engulfing candle. The candle to almost 1.6%. That's a massive candle. And now the only next resistance is this entire zone, right? On a bigger time frame, if you're a positional trader, you have to look at a bigger time frame. So 18,600 to 18,730. These zones are going to be a strong resistance zone. And ideally, what I believe on any time frame when you look at it right now, what I think would happen is after such a strong bullish candle, we could even probably, if you open gap up looking at Singapore or in any situation on a bigger time frame, it's a high possibility we might see a wick and a red candle here, but that doesn't mean you have to directly immediately short the markets. Allow the markets to give you time, because after a 1.6% candle expecting another 2 weekly candles of 2% each, that's not how markets move. You have to give time to the markets. So if you're trying to play a potentially strong breakout positionally, so in that case you have to wait for a weekly closing above 18,720, 730, above 18,700. Any weekly closing will be strongly bullish and we can be positionally long with our stop losses below 600. So that's a very favorable risk reward on such a big time frame, right? So that will be a very nice trade to take. And now if we come back to daily on Friday, the markets have clearly broken out. This was a strong range that the markets were playing between 18,050 to 18,450, and finally we see a closing 50 points above that. We've closed at 18,500 levels. So now the next immediate target on daily is 18,600 followed by 18,871, which is the all-time highs. However, it's not going to be a straight line move. It might go up, retest this zone, or come back here, consolidate between this zone before eventually breaking out. So plan your trades accordingly. Don't plan in FOMO just because you think that the rally might be missed. Don't be sitting on the wrong side of the trade. Every dip should now be considered as a buying opportunity until you see a closing below 18,000, below which we can be positionally short. But until then, every dip will be bought. Now moving to an hourly time frame. Again, clearly a strong breakout. The markets on Friday have closed entirely in green. So now if you think logically, right, if at all Singapore does show a gap up and markets tend to continue bullish on tomorrow morning, global markets and our markets. So in any case, right, you see like a gap up opening, any opening above 18,500, 18,550 zones, around 18,600, right? There's a high probability the first trade that we might get will be a gap fill trade until 18,500 psychological levels to test those levels and then start our journey back, right? So if you're an early time frame trader and the morning candle looks like this, right? The first early candle looks like a red candle and then retest these zones, and then you see like probably a morning star pattern, right? Like a strong bullish hammer or a strong bullish engulfing candle around these zones, that's when that high is taken out. You should be planning your trade. Don't chase the gap up, because as an option buyer you could be sitting on the wrong side at that moment. So wait for the gap to fill or wait for 18,500 levels to be retested, and when you see any bullish signs there on early, that's when you should be building your longs and eventually breaking down to a smaller time frame. This is the preferred time frame for me. I usually trade this time frame. But however, having a picture about all the time frames and the levels that are denoted by those time frames is important, because bigger the time frame, stronger the resistance or the support. So in that way, you should have a multi-time frame analysis before jumping into the week. So in any case, we open gap up on a 15-minute time frame around 18, 550, 570, 600, around these levels, right? You should wait for a pullback until 18,500 levels, and then when the journey starts back, or it will be surprising, right? Because the thing about bullish markets is it's difficult to grab. You don't just get it easily. So it's a high possibility, even if you open around 18,600, a pullback till 18,400 is still not bearish in nature. Below 18,400 on a 15-minute time frame, we can plan bearish trades, because then this entire move will be a fake out. So below 18,400 is when we are going to short intraday or positionally. Until then, we are only going to look for long opportunities. So the opening between 18,520 and 18,420, between these 100 points can be a bit tricky. So wait for a 15-minute closing above 18,520, and we should be booking our profits around 18,600. Wait for a pullback and then initiate fresh longs. So basically a pattern like this is the most illustrative I can be with this. If the pattern looks something like this, right? So around these low zones, when 18,520 and all is breaking, around these zones is where you could build your longs for 18,600, followed by you can trail your stop losses eventually until all-time highs. So that's our trade plan in Nifty. Now coming to Banknifty, since I trade Banknifty more, I am super bullish in both the indices, Nifty and Banknifty. Global markets also I'm pretty bullish right now. So all in all, my bias is bullish. I'm going to be looking for long opportunities. And after such a strong consolidation, right? If you see, okay, let's move to weekly before that, since the week is starting. On a weekly time frame, it's clearly very bullish. We have taken out all time. Okay, yeah. One more thing you got to understand is, if at all the markets had to fall, right? Sellers are very quick in execution. Whenever there's supposed to be a sell-off from an all-time high or a very strong resistance, the sell-off is pretty fast. It does not give the participants in the market to play out a consolidation. It's pretty fast like that, because you see the last time around the 12th of December when the markets touched 44,150, the week corresponding to that, we went all the way down to 41,600, right? So that was massive. So in that context, 2 weeks of consolidation around the all-time highs is a good picture, and anytime now 44, 144, 150, we see a weekly closing above it, that is strongly bullish in nature. But some consolidation right now would be helpful. Even if you have another candle that looks like a bullish hammer around these zones, it's nothing to be scared of. It's not bearish in nature. It's only the market accumulating from all the participants to eventually break out. So be patient for a nice entry. And moving to a daily time frame, this consolidation of around 10-11 days is finally going to come to an end, right? So in any case, on a daily, we open gap up, and as far as we stay above 44,000, like we see a candle that even looks red in nature, or it's a red doji, but as far as it's above 44,000, it is a positionally long entry, a positionally long sign. You can hold on to your longs, and the targets that I see from this space are around 44,600, 44,800 on a positional, so you can hold on to your longs. And the best thing is, as far as we are above 44,000, right, and if we open gap up tomorrow and still manage to sustain above 44,000, our stop loss is really small. Our stop loss is a daily closing below 44,000. So that's a very favorable risk reward, right? You're playing out positional on a daily time frame, and you have a stop loss of say 100, 150 points. That is the best, most incredible favorable risk reward that you can get. So try to play and participate in that, but always know your position sizing. On an hourly, again, pretty simple analysis. Market has just been hovering around in the same zone. Really hasn't given any direction. This is all we see in the markets, this consolidation. However, now this looks like a very strong double bottom, right? Some could argue it's a triple bottom, but I look at it as a double bottom. And any breakout above this is gonna give us if you are talking targets based on technical analysis, then the entire zone that you see, the consolidation range, that is supposed to give the target of the breakout. So basically what I'm trying to convey here is, if for example this was the range of the channel, so this thing exactly projected above the breakout somewhere around here gives us targets of 44, 750, 760. And now why those targets are very interesting is because when you pin this down to a smaller time frame, right, we have been discussing the channel, right? There's the lower end of the channel which I've gotten rid of on my charts. It's just for my own ease. But if we are still continuing to play the long-term channel, then according to that also our targets are around 44, 700, 800, 43,000 levels. So that's a significant, reasonable target to book, right? So anywhere around 44, 600, you could be booking your longs and allow the market for a pullback or a consolidation. So our trade plan on a 15-minute for Bank Nifty is pretty simple. Any opening between 43,700, 43,750 to 44,000 is non-tradable as an option buyer. You just gotta wait, allow the market to consolidate, break down, whatever. But below, if you see a 15-minute candle closing below 43,750, that's the 200 EMA on a 15-minute time frame, then you can short the market intraday for 43,400. First target being 43,600, followed by 43,400, 350 levels, below which then we can become bearish in nature. We can become positionally bearish in nature. But the probability of that is bleak, very little to none. So in any case, you open gap up, right? A strong gap up. Like if you gap up probably say 300, 350 points around 44,250, 44,300, allow the markets to pull back, try to fill the gap and show some kind of bullish reversal sign around 44,000 to 44,100 levels. That's when you enter your first long trade. If you open flat and take out 44,150, so any 15-minute candle closing above 44,150, we are long. And a gap up opening, do not chase it, wait for the pullback and then participate in the rally after that. So that's my analysis for the market, and I wish you guys the best of the week and do well, protect your capital, always know your risk and position your size your positions very, very carefully. That's the most important part of being a trader. The biggest responsibility you have is to protect your capital. So do not fear the fact that in FOMO you could be missing points. Rather be happy that you are not sitting on the wrong side of the trade. So always, trading is not a get rich quick scheme. It's gonna take time. Allow your returns to compound, allow your profits to compound over time, and that's where you see real wealth and money. So with that, I wish you all the best, do well, and probably I will be making a video on equity options that could be traded probably tomorrow or day after. I'm going to be doing my analysis today, and if I do it in time, then probably I'll be uploading it tonight, or else by tomorrow I shall be uploading that. So all the best, and I'll see you guys tomorrow with my analysis with the equity and markets. On that note, kindly follow me on Instagram as well, because I keep uploading my daily PNL there, and kindly like, share and subscribe. I was rather delighted, like this is the first time I saw so many likes, and it means a lot. It means, like, why this means very important and a lot of depth to me is because I believe that it's helping these kind of people to help them with the market, with the analysis, especially new traders, because we all need that at some point. So this is the only kind of gratification I'm looking for. So thank you for that, and do like, share, subscribe and share it with people who might be in need of an analysis or zones to trade the markets, and I'll see you guys tomorrow. All the best.